Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about dividends, and this includes my top 5 dividend stocks to list right now. So these are some stock picks that I think are some pretty reasonable buys if you want to focus on dividends. And keep in mind with this list as well, not only am I focusing on dividends, but I'm focusing on growth as well. So some of the stock picks will have high dividend yields and stuff like that, but then some others will have maybe a little bit lower dividend yields, but the growth is very good on them. So that's why I think they're worth purchasing. And it's still considered a dividend stock. It's just less of a dividend, but you're actually making more money in growth compared to what you would be paid in dividends. So you're getting like the best of both worlds, which is both dividends and really good growth. So some of those are focused on growth and small dividends, and some are just focused on giving you dividends for those individuals out there that just really want to get the payment in the meantime, rather than waiting until they finally cash out in retirement to finally have some money to use. And by the way, if you do enjoy these types of videos where I talk about my top 5 stock picks for certain categories and stuff like that, then please make sure to smash that like button, drop a like on this video. If we can reach 200 likes, I'll do another top 5 dividend stocks video, and I'll also do another top 5 stocks video as well that isn't focused on dividends. So 2 new top 5 videos. If we get 200 likes on this video, I would definitely appreciate it. And also, if you're new, feel free to subscribe as well, because I do videos like this all the time. Now, with that being said, let's go ahead and start off with the first pick, which is Microsoft stock. And yes, I know a lot of you that are subscribed to my channel may be a little bit disappointed, because yes, I choose Microsoft for a lot of my top 5 lists, but there's a reason for that. I think Microsoft is just overall one of the best stocks in the stock market. I mean, if you look at the past 5 years of growth, absolute total consistency in it. This growth really proves what a great business model Microsoft has. And as you can see, it takes up about 44% of my portfolio, and Microsoft is the largest holding that I do have within my stock portfolio. So this stock is definitely a big deal, but there's a lot of reasons why I've chosen to invest in this stock, and I really think it's going to be one that will grow a lot in the future consistently. So with that being said, let's go ahead and check out the dividend yield. As you can see, not too crazy, just a 1.02% dividend yield. So like I said, nothing too crazy in terms of the dividend, but I felt like this wouldn't be a legitimate top 5 list if I wasn't being completely truthful. If I didn't have the number 1 stock that I own that also offers dividends as my number 1 stock out of this list, then would it really be my top 5 picks for dividend stocks? I feel like it wouldn't. So I have to be real with you all and show my actual number 1 pick, which is Microsoft. Even though it gets a little bit repetitive across some of the top 5 lists and stuff like that, this is the best dividend stock out there in my opinion. Yes, it doesn't have a primary focus on a high dividend yield, but it does have a primary focus on growth with the addition of dividend yield. So I'll go ahead and show you all a recent dividend payment that I received from Microsoft from owning this stock. So as you can see, on June 11th, keep in mind this is only for 1 quarter, the second quarter of this year, I got $57.63 from dividends for holding 113 shares of Microsoft, and I got 51 cents per share, equaling this total of $57.63. So yes, I had to put a lot of money into buying these shares to get this payment, but still, when you think about this $57.63 adding on to my already pretty solid growth that I have, keep in mind that I didn't start investing heavily into Microsoft until about 3 months ago, and then out of this $38,000, I put about $15,000 of it within the last 2 or 3 weeks or so. So a huge part of my investment in Microsoft has actually been much more recent than you would think. So considering that my significant purchases of this stock just started about 2 or 3 months ago, I mean, the 13.75% is pretty solid, because if you think about an ETF like VOO that just mirrors the general stock market trend, on average it gains about 10% per year. And like I said, it tracks the top 500 companies in the S&P 500, and it averages about 10% in gains per year. So 10% per year is like that milestone that I want to at least reach for every 12 months or so. And with this stock, Microsoft, I've already gained about a year's worth of earnings in just like 3 months or so. So that's a big deal, and that's about $4,600 in returns. So in my opinion, Microsoft is a fantastic growth stock that also offers dividends. So therefore, I would consider it a dividend stock as well. And if you look at their earnings reports, they consistently beat earnings earnings. They beat expectations every single time, at least for the past few quarters or so. So this is a stock and a company that definitely does not disappoint in terms of earnings, and it's also still under fair value right now with a Morningstar research report of 3 stars out of 5. So it is under fair value, but just barely, because it's at $195 right now. I've been preaching about this stock ever since the most recent dip, when it was like $135 and $140 and $150. I bought this stock as it was going down and at the bottom as well. And I've been trying to tell some of my subscribers that this is definitely a good purchase, but keep in mind that nothing in this video that I say is to be considered financial advice. It is simply just me sharing my thoughts and opinions about the market. So with that, I think Microsoft is an awesome stock choice, especially for growth, and then the dividends are just a bonus. But I think once people realize how much this stock grows, the dividend may be less of a topic, because they'll realize how much more you can actually get when it comes to growth compared to just dividends as well. So you get the best of both worlds with this stock, in my opinion. And then for the second choice, we have ticker symbol O, which is Realty Income. So the special thing about this stock, for one thing, it has a pretty high dividend yield, but the really special thing about this stock, and the reason it is my number 2 choice, is because you get a dividend payment every single month. Instead of it just being like every quarter or once a year, you get it every single month. So for a lot of people out here that really need dividends to motivate them to keep investing in the stock market, then I think Realty Income is a really good option, because it's consistent passive income. It's not like passive income where you kind of have to wait around for 3 or 4 months just to wait on that quarterly payment. You can look forward to this every single month, and I think that's absolutely huge. So just to go ahead and check out the Realty Income website and just show you what they're all about. As you can see, they emphasize monthly dividends / strong shareholder returns, and it says 14.6% compound average annual total return since 1994 New York Stock Exchange listing, and then 4.5% compound annualized dividend growth since 1994 NYSE listing. And this is also huge as well. 599 consecutive monthly dividends paid and 91 consecutive quarterly increases. And this 91 number is huge right here. This means that quarter after quarter, the dividend has been increased for like 91 straight quarters. And this number is huge right here as well, because this means that dividends have not been canceled for 599 months. So that's usually a big issue that I have with some of the high dividend yield stocks out there. Yes, the dividends are nice, but it defeats the whole purpose when dividends are canceled, when everyone is in that time of need and when the stock market is in a downturn. That's when really people need dividends the most. That's why people invest in dividend stocks, so they can get some sort of returns when we're in a bear market. So that's important right here. 599 months in a row that dividends have been paid, and then quarterly increases for 91 quarters in a row. And then right here, it emphasizes diversified real estate portfolio of over 6,500 properties under long-term net lease agreements, 630 different tenants, 51 retail and other industries, and 49 states, Puerto Rico, and the United Kingdom. So these are some huge pieces of information, and even with reading on the website, for one thing, it just shows that there's a reliability to be paid month after month in dividends. It says they've been paying dividends for 599 months in a row so far. That's the current record. So that's a huge deal. They're probably going to be less inclined to cancel dividends, because that's really what this thing relies on. That's what this stock mainly relies on. But keep in mind with this REIT as well, that it's going to suffer a little bit more when there is a stock market crash, because as we know, a lot of the technology stocks and stuff like that have recovered and already gone past the most previous point. So there is some risk to this stock still, even though they have good records in terms of their dividends and stuff like that. Just keep in mind that the value and like just the share price will probably go down significantly if there is another crash in the future like this, because we see this negative impact right here. It went from $80 to like $62, but it's still up 37% over the past 5 years. That's not beating the 10% per year quota, but it still is offering a significant amount in dividends, and I think that's what people really care about when it comes to investing in this stock. So this is definitely a huge one as well. So next up, we have number 3 out of 5, my third choice for dividend stocks, which is Apple. Now keep in mind, Apple is a growth stock, so there's going to be a primary focus on growth, and then dividends come second. So the dividend yield isn't too crazy. If you go down and check, it's about 0.89% for the dividend yield, so not even 1% for the dividend yield. But what I really want to emphasize about this stock, like I said, is it's a growth stock. So over the past 5 years, it's up 176%. That's pretty crazy, since, you know, usually the typical rate with VOO is 50% for the past 5 years. So it's already over 3 times the typical stock market rate of return, but keep in mind as well that a lot of this percentage has come within the past year or so. So Apple is up about 74.38% for this past year, and I really do think it deserves it just because they released the AirPods. That was groundbreaking. That was huge. It seemed like something that many people had thought of before, but Apple was really the ones that made it popular and implemented it into like society and norms and stuff like that, to where it kind of became lame to have like corded earpods, and only a company like Apple could do that. So this is huge. The devices like AirPods and stuff like that. You have the Apple Watch, and then of course we had the most recent iPhone release as well, which was absolutely huge. That was a very successful release in my opinion. I actually finally upgraded my phone as well after having it for 3 years, and so I got the iPhone 11 Pro, and I love it. I think Apple has the best smartphones in the game right now in terms of just the user interface and stuff like that. So I have a lot of faith in them in the future. There is the argument that the share price is currently way overvalued. If you look at the fair value according to Morningstar, a good fair value for them is $240, and Apple is way over that at $348. So over $100 than the actual fair value price. But I think that Apple deserves to be at this spot right now because people are underestimating them. Analysts are underestimating them. They're sitting on a huge pile of cash, and they also generate tons of revenue each year from their new smartphone iterations, and of course their other devices as well, such as AirPods. So I think there's still a lot of potential for this stock in the future. And like I said, a lot of the revenue that comes from holding this stock comes from growth rather than dividends. But I think once people hold this stock and they still get their dividends and realize, okay, these are some solid dividends. But once people realize how much this stock can grow, I think that will really change dividend investor perspectives on growth stocks. Because to be honest, a lot of the times it's better to prioritize growth over high dividend yields because you can get so much more returns out of high growth than high dividend yields. You're kind of limited on dividend yields, whereas growth is technically like limitless. Next up, for the fourth choice out of 5, we have VOO stock. So this is actually a Vanguard S&P 500 ETF, meaning that it tracks the top 505 companies in the S&P 500. So like I was mentioning earlier, VOO is an ETF that tries to mirror the general stock market trend, and it gains about 10% per year on average. As you can see, for the past 5 years, we're about at 50% right now, about 48%. But if you look at the most recent peak before the crash, it was up even past that 10% average per year at about 62%. So this is one of those stocks that I would really just compare to an index fund. It's basically an index fund in my opinion, just in terms of what it does and how it performs. It's pretty much an index fund. You can't really buy just a straight up index fund in Robinhood, but this is about the closest thing that you can get to that. And the reason that I chose this as my fourth choice out of 5 is because, for one thing, the dividend yield is actually pretty solid. It's 1.85%, and I've actually received dividends for this stock in the past, so I'll show you an example. This was before I sold all of this stock. So to give you some context, I sold $32,000 in VOO at a loss to invest it in Microsoft and Tesla because I thought both of those stocks were undervalued, and it turns out that it paid off because I earned way more than that $2,000 that I was in the negative back. So I've earned about, I'd say like $4,000 to $6,000 or $4,000 to $8,000 on Microsoft since that redistribution of stocks. But to just show you all the dividend that I got on March 15th, I actually had one coming up in June, but like I said, I sold about $32,000 early at a loss to make more money with the other stocks. So I didn't get that most recent dividend in June, but as you can see, I got $137 for owning 117 shares. But keep in mind, 117 shares is $32,000 worth of stock. So basically, I got $137.83 for holding $32,000 for 1 quarter. But if you really think about that, that's over $400 per quarter for holding that much in VOO, and that's just in dividends. So that's pretty solid on top of the 10% per year that you usually get with an ETF like VOO. So the reason that this is my fourth pick out of 5 is because I think that this is one of those pretty consistent stocks that is reliable. It may be considered a little bit safer in some aspects, but in my opinion, some of these tech stocks like Microsoft are actually safer than ones like VOO, since VOO also include the underperformers in addition to the overperformers, whereas my choice is kind of just to pick the overperformers instead of trying to balance them all out. I like to focus a little bit less on diversification if I do my research, and I think that's important. So in my opinion, diversification isn't always necessary if you have done your research, but it is very rare that someone has done their research and their confidence in stocks is justified, and only time will tell with my holdings as well. But I think for a beginner, for someone that's new to investing, I don't think it's a bad idea to invest in this VOO ETF because it's really something that you can kind of start out with and get used to the market with. And like I said, you're also getting dividends as well. So I think that this is a really solid stock, and I think that it's kind of one that you could hold forever until retirement and still expect it to be near all-time highs or doing fairly well for how long you've held it. So finally, we have number 5 out of 5, which is JPM, ticker symbol JP Morgan and Chase. So as you can see from the description, a financial holding company. It provides financial and investment banking services. So it's a bank stock, commercial banking. But as you can see in terms of dividend yield, this actually has a pretty high dividend yield, 3.52. That's really solid. That's a lot higher than a lot of the stocks that I've listed so far, aside from like Realty Income and stuff. But this is one of those that is a little bit more focused on the dividend yield, but you also get pretty solid growth as well. Even at its point right now, over the past 5 years, it's still up 44.51%. But if we look at the previous peak before the crash, this stock was up 103%, which is really, really good considering that the dividend yield is about 3.52%. So it has a high dividend yield with some also solid growth as well. And so far in terms of dividend yield and performance, this performs better than VOO. But keep in mind, like I said, VOO, I'd put it as 4 out of 5 because it's one of those that I think pretty much any new investor can invest in and expect pretty solid returns over the next 40 years or so. Whereas with this one, it's an individual stock. There's a little bit more risk to that. So that's why I prioritize this as the 5th instead of the 4th out of 5. But in my opinion, banks are always going to be the backbone of the nation in terms of just finance and stuff like that. So I think that's important to keep in mind as well. Yes, bank stocks and stuff like that may not be looking too hot right now. And another thing I kind of think of is that, like, if bank stocks go downhill, then that means pretty much the rest of the stock market is going downhill as well, because that's pretty much recession time. So if bank stocks aren't doing well, then I would say a lot of the other stocks out there are probably not going to be doing very well either. But still, I think this is a solid choice for a bank stock. If I was to purchase a bank stock, this would probably be one of my main choices out of all of them. Anyways, I just wanted to share this video with you all, and just full disclosure, this is my portfolio that I have right now. I did have to include 2 of the 3 holdings that I have within my portfolio, which was Microsoft and Apple, because how could I make a top 5 list if I wasn't going to include some of the stocks within my portfolio that do offer dividends? As we know, Tesla does not offer dividends, so that's the reason it wasn't included. But anyways, I hope you all enjoyed this video. Let me know what you think down below. What are some good dividend stocks that you are looking at, or some ones that you hold currently that you think are of good value right now? Feel free to share that down in the comment section below. Make sure to smash the like button, drop a like on this video. Really does help me out. And also feel free to check out my referral links to Robinhood and Webull down in the description below. And if you use that referral link to sign up, then we'll both get some free stocks. HLX is just one of those few examples, about $4. Yes, it's a small value stock, but it's still free $4 that you can sell eventually. So anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week. Stay safe out there.